Okay, in today's video, we're going to talk about the opening range breakout strategies, or ORB. I'll show you exactly how it works, and I'll even share with you a backtest over 7 years of data to see if it really performs. So what's the ORB strategy? The concept is very simple. During the first X minutes of the market open, in this case, we're going to look at windows of 15 minutes. The price create a range with a high and a low. And like in this case, this is the opening of the session, New York session. So now it says 15:30 because I'm in Italy, but I can change it here to NYC, and you see it's 9:30 a.m. That's the beginning of the session, New York session. You mark the low and the high of the first 15 minutes. In this case, that's the box. And the strategy is very simple. It's a breakout-based strategy designed to capture the momentum right at the open when the volatility is high. So it's very simple. If the price breaks above the range, we go long. If the price breaks below, we go short. That's it. Now that you understood the logic behind, I coded the strategy in MQL5, and you can see here on MT5, this is my expert advisor. That's the name like for this strategy. And we can do a visual backtest. Let's begin. Okay, so here we are on the 5-minute chart, NASDAQ, and that's from the beginning of 2018. And the backtest is going to be from 2018 till August 2025. So basically what the algo is going to do, you'll see it now. As soon as the New York session begin, the algo is going to build a box. Okay, perfect. That's the box that the algo built, and is exactly from 15:30. Now is the Italian time. If you convert that to US NYC, that's 9:30. First candle, second and third, that's the box right here. Then the price breakthrough. In this case, I have a filter because the basic strategy, it doesn't seem to work very well, and I add a filter. The filter is if the price break through and a 15-minute candle close above the line, we go long. And the same thing for short. So it's not just a breakout, but it's like a breakout, and then you have to wait for 15-minute candle to close above or below to enter. So in this case, we lost like 18 points, but over thousands of trades is going to perform much better than the basic logics. That's the line when at 8 p.m. the algo says, okay, no more trade for the day. If the trade is open, okay, let's keep it going, but no more trade after that time, basically. And that's the forced close. So at 9:40 p.m. we have a forced close. It's an automatic exit to prevent the slippage overnight, and then also to prevent swap. So we like to reduce that fee, closing the position before the time when you pay the swap. So you increase the margin. You can see here that was a win. We took like 35 points. We can speed up the process so I can show you how it performed over the years. The opening range breakout is not just long, but it's long and short. I also tested only long position, but it worked just in some period of time. So if the market just goes up, it's perfect. But during some period of time, like COVID or maybe some other crisis, that's not that good, because all of those assets like S&P, NASDAQ, Dow Jones, they are not performing well. So it's better to have both side position. So sometimes it's going to go long and some other times just short. I can add that in the background and we can see the graph of the equity. Yeah, maybe I can speed up the process because it's taking so long. Okay, it is going very well. That's the beginning of 2018, and now we just close 2018 here in profit. We can even do a quicker backtest. Okay, so that's the backtest over 7 years from 2018 till 25. Okay, and as you can see, that's a pretty good performance over the years. And we took 1,400 trades, most of the time losing trades, because you see here that those are the winning position and is just a little below 35%. So the win rate actually is below 50. But if you look at those numbers, are the loss, average loss, and this is the average win. So we have like 3R, very close to 3R risk to reward. So that's why this strategy is a winning strategy. So that's the Sharpe ratio. It seems good. That's the main factor we look at. The recovery factor. Recovery factor is the total net profit divided by the biggest equity drawdown. So it's not like this drawdown here is like the balance drawdown. This is the equity drawdown. What's the difference between the two? Basically, a position, it did like a big drawdown, but then it closed with a profit or maybe closed at break even. Okay, those are the settings of the strategy. There are two signals. So not just the first breakout, but we have two breakout. The range inputs are 930 and 15 minutes duration. That's the switch off signal. So after that, no more signal for the day, no more position. So that's it. And then the other important thing is this one. As I showed you before, we are going to wait a 15-minute candle to close above the range, and same thing below the range for a short. And that's this input here. I tested 5 minutes, 10 minutes, 15, 30, 1 hour. The best in this case actually is 15 minutes. And then we also have a trailing stop loss. You don't need that, but sometimes the price, when there is a lot of volatility, like spike up or down and then recover, and maybe you get a stop loss after a very good position. So that's happened. So one more thing that it's much better when you trade those strategies with algos is that the algo has an automatic position sizing function. And what's that? It's like you can see from the trades here, every single trades has different volume. So the algo calculate the range pips, let's say 35 pips, and then you have a stop loss of 60% of the range. It's going to calculate how many pips of stop loss, and then it depends on how much you want to risk. In this case is maximum 100 USD for trade, so it's going to convert that in the right volume, right lot for that position, right size, and that's much easier. Like if you think about how many trades it took, it was like 1400. If you have to do that over and over manually, it's going to take ages. So that's much easier, and also it's going to remove the human error. Also, one more thing about that is that you remove emotion. Maybe you're not confident, but when you have an algorithm that do that, you don't think about it. Sometimes you don't trade, you're not on the computer, so that's much better. In another video, I'm going to show you how to optimize algorithms, because as you can see those parameters, you can modify them as you prefer. So if you put like 1000, that means 10 times the range, your take profit is going to be 10 times the range. Of course, it's hard to test that manually. You can do the same backtest manually. It's going to take ages, because 1400 trades, if you change every time the take profit or maybe the stop loss, is very hard. I'm going to show you how to optimize the parameters, because it's very, let's say, useful, and also you can improve the strategy much more. And yeah, I think that's it for the first YouTube video of the opening range breakout strategy. That's very simple. I coded this strategy, and you can see it here is about 1,000 row. Yeah, I'm not gonna show you exactly the algo because it took me many hours. Those are the inputs, and yeah, that's it. So this is the end of the video. It was my first time I'm recording something about what I'm doing, and also it's not perfect because it's the first one, of course. I will try to improve, and of course, if you like the video, subscribe and leave a comment and ask me if you want to see something specific or see some other type of algos, of course. And yeah, I'm Italian, so it's not going to be perfect, the pronunciation and also my English. That's it. See you on the next video.